I want to give you a quick guide to paying quarterly taxes. Okay, so here's an overview I want you to pay attention to. So first of all, when we talk about a guide to paying quarterly taxes, you got to really have a clear idea about your business situation or your self-employed situation. Because the whole thing is that self-employed taxpayers likely need to pay quarterly tax payments and meet key IRS deadlines. And so the thing is that if you work as an independent contractor, a sole proprietor, a member of a partnership that conducts business, or a person who otherwise runs a business as your own, you likely need to pay quarterly estimated taxes. And the thing is that quarterly taxes generally include self-employment taxes. So this includes Social Security and Medicare, plus income tax on the profits that your business made and any other income. And if your income drops during the year, or if it really increases, you can adjust your quarterly payments accordingly, not a problem. So the IRS is pretty flexible in that regard. And you can submit your quarterly payments online through the Electronic Federal Tax Payment Solution, the EFTPS, or pay them using paper forms available from the IRS. So the possibilities are there in terms of, the IRS is pretty flexible, okay? So when we talk about estimated tax payments, it really depends on your situation, because the bottom line here is that working for yourself presents a host of benefits, such as never having to report to a boss, right? And setting your own hours. That's totally fine. But the thing is that you have benefits, but you also have duties, if you will, because that situation carries a few added tax requirements, such as paying your taxes quarterly instead of with each paycheck as a W-2 employee would in terms of tax withholdings. And so it's one of those things where you have to really be really sure about your situation. So let's first clarify a few things. Who is required to file quarterly taxes? So if you work as a self-employed individual or a small business owner, you likely need to pay quarterly estimated taxes. You're typically considered self-employed if you work as an independent contractor, as a sole proprietor, as a member of a partnership that conduct business such as an LLC, a partnership, an S corporation, or in some cases, in some rare cases, a C corporation, or you are a person who runs a business as your own, including part-time. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let's talk about who should pay estimated taxes. So the IRS actually uses a pay-as-you-go income tax system, meaning that you must pay your taxes as you earn income. Okay, this is pretty straightforward, and the agency enforces this by charging penalties for underpayment if you haven't paid enough income taxes through withholding or making quarterly estimated payments. It also charges penalties on late payments, even if you end up getting a refund. So the IRS uses a couple of rules to determine if you need to make quarterly estimated tax payments. So, for instance, if you expect to owe more than $1,000 after subtracting withholding and tax credits when filing your return, or you expect your withholding and tax credits to be less than 90% of your estimated tax liability for the current tax year, or 100% of the previous year's tax liability, assuming that it covers all 12 months of the calendar year. So this is kind of important. So these are commonly referred to as safe harbor rules. And so the 100% requirements increases to 110% if your adjusted gross income exceeds $150,000. This is $75,000 if you are married and file separately. And one exception that I really need to say here is that this exception applies to individuals who earn at least 2/3 of their income from farming or fishing. So the requirement is to pay in 2/3 of your current tax year or 100% of your prior tax year. Also, there is only one estimated tax payment date, so this is January 15th of the following year. Additionally, if you pay in full by March 1st, then estimated tax payments are not required. So this is kind of cool. So the flexibility is really there. So paying your taxes quarterly can avoid the cash crunch you might actually face come tax time. So paying quarterly installments can make paying your bill far easier than one lump sum payments, especially if you have underestimated your taxes due. And so what taxes do self-employed people pay? Well, you have self-employment tax. So this is Social Security and Medicare, but you also have income tax on the profits that your business made and any other income. Okay, so this is kind of important. And it's one of those things you're going to have to estimate your taxable income to have a clear idea of how much you actually will owe the IRS. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about a guide to paying quarterly taxes. So let's talk about the qualified business income deduction. This is another question that a lot of folks are asking. So you may have a chance to reduce your self-employment income by further claiming the qualified business income deduction, the QBI. So this allows you to reduce your pass-through income from self-employment or owning a small business by up to 20% on your tax return. So you can reduce the net amount of qualified items of income, gains, deductions, and losses tied to your trade or business. This means items like capital gains and losses, dividends, interest income, and other non-business gains and losses do not figure into this calculation. Okay. So one thing for sure, that to claim the QBI deduction, your taxable income must fall below $185,000 for single filers or $365,000 for joint filers this year. It's usually around the same amount anyway. So you first determine your self-employment or business income and report your AGI, your adjusted gross income, on Form 1040. And from there, you can calculate this pass-through deduction. Okay, so this is totally straightforward. Now, one thing I want to say here is that there are some like the payment. When we talk about quarterly taxes due, the payment dates, usually you have the first quarterly estimated tax payments that's around mid-April. So mid-April of every year, like April 15th to April 20th, give or take, you have to actually account for the first quarterly estimated tax payments. The second quarterly estimated tax payments is around June 15th. So mid-June, June 15th, you always have to account for it. The third quarterly estimated tax payments is around September 15th. So mid-September. And the fourth quarterly estimated tax payments is around mid-January. Okay. Or you can file your tax return by March 1st with your full remaining payments and not submit this quarterly payments. This is totally fine. It's one of those things where you have to really account for it. Now, if you want to avoid tax penalties, you always have to send your cash by those due dates. Okay, very important. Let's talk about how to pay quarterly taxes. Okay, so once you have calculated your quarterly taxes, you have three ways to actually settle your debts with the IRS. You can submit them online through the electronic federal tax payment system, the EFTPS that I was just talking about earlier. So that's the first option. That's actually the fastest option, though. This is the fastest option for you to actually clear your debt with the IRS. The second option is you can also pay using paper forms supplied by the IRS. That one is longer though, but it is what it is. It really it will get processed anyway. And the third option is when you file your annual tax return, you will pay the balance of taxes that weren't covered by your quarterly payments. Now, do you have other options? Yes, you have other options as well. When you show an overpayment of tax after completing Form 1040 or 1040 SR, you can apply all or part of your overpayment to go towards your estimated tax for the current tax year instead of being refunded. And so consider this amount when estimating your tax payments for the current tax year. You can treat the overpayment credited toward your estimated taxes as a payment made on the April deadline for the first quarter of the current tax year. This is totally possible. But also you can actually use your new total annual income to estimate your quarterly payments for the next tax year also. So you have flexibility. And you can also use the software like QuickBooks Self-Employed or H&R Block Self-Employed or TaxAct Self-Employed to track your income, expenses, and deductions throughout the year, which will help with estimating your quarterly payments. It's one of those things where you want to really start thinking about tracking your income, your business income throughout the year, so you are well aware of how much you should be paying the IRS. Because the bottom line is you need to really avoid paying penalties, right? And you also need to be cognizant of the different deadlines that I just gave you earlier, so that you are clear enough that you will have enough liquidity to actually settle your tax liabilities. So It's one of those things where you got to be a great tax planner. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about paying quarterly taxes. So this is a guide to paying quarterly taxes. Let me give you a few pro tips here. So the thing is that when we talk about quarterly taxes, you have to understand, we're not speaking about taxes that are definite, they are specific, they are accurate. We're speaking about estimated, because it's actually a type of taxation you must pay in advance of the annual tax return. And so it's just because we use the term estimated, not we. The IRS uses the term estimated because of the pay-as-you-go system. Okay, so you pay those taxes throughout the year, and at the end of the year, there is a reconciliation that gets done, and the IRS sees if you're overpaid or underpaid. Okay, now the thing is that the government requires quarterly estimated tax payments because of the pay-as-you-go, because otherwise you'll be having a lot of cash from the government, a lot of government cash sitting in your books, and no, the IRS wants to be paid too. Okay, so the IRS collects income taxes with quarterly tax payments. So it's one of those things where you have to always plan. As I said before, you have to plan. Now the IRS is not going to give you a break here, because everybody else is paying their fair share of taxes. Why shouldn't you? Okay, if you're a W-2 employee, you are getting your taxes withheld every time you get a paycheck, right? So if you are a self-employed and you're not really contributing to the Social Security and Medicare funds, you need to really sort of account for that by actually filing your estimated tax payments. Now, things can be a little complicated if you have multiple sources of income. In other words, if you're not just a 1099 contractor, but you have a business, let's say you have a Schedule K1 from Form 1065 or a Schedule K1 from a Form 1120S, then we get into a situation where it's a little more complicated, because you need to really account for your business income, how much your business is generating in income, because those businesses, LLC, S corporations, don't pay business income taxes. They don't pay taxes at all at the business level. They pay taxes actually when the income is transferred to the owners or the members, if you will, the LLC members, individual tax returns. So that's why the IRS wants to be paid anyway. So bottom line here is that you need to have a way to actually track your business income and also your personal income. So how do you really know if you owe quarterly taxes? Well, it really depends. If you are currently a small business owner or self-employed, you likely owe quarterly taxes, that's for sure, because you don't have the W-2, that you don't have your taxes withheld from your W-2. As a matter of fact, you don't even have a W-2. So because you don't have a W-2, then you got to have another way to actually pay the government. Okay. And so self-employed workers usually include independent contractors. You have sole proprietors. You have members in the partnership that conducts business like an LLC. I just want to say that, but it's not just the LLC. I mean, you have LP also, limited liability partnership. You also have LP, limited partnership. You have LLLP, limited liability. I forgot the third one, partnership. But bottom line here is that whenever you have a partnership that conducts business like an LLC, you gotta have to really pay for quarterly taxes. And also, if you're a part or full-time business owner, you'll still qualify. So even if you're a silent agent, that means you're a part-time business owner, you still need to actually account for quarterly taxes. Okay, it's one of those things where you have to understand that your responsibilities are kind of similar across the board to those of W-2 workers. So the thing is that if you're required to pay quarterly taxes, you got to have a way to track your business income or your income in general. You must first use Schedule C or Form 1040 to determine how much you owe. And now, however, if your net earnings are less than $5,000, you may be able to file a Schedule C Easy instead. And both forms will help you determine your net earnings or loss. The bottom line here is what? The bottom line is that when we talk about paying quarterly taxes, we're not just talking about a requirement at the federal level, because depending on the state you're in, some states might require you to actually also pay your taxes every quarter. So it's one of those things where you want to, first of all, you want to inquire with your state tax authorities to really have a clear idea what the responsibilities are in your state. Or you can just hire an attorney if your budget so allows. You want to hire an attorney, a tax attorney, or a CPA, certified public accountant, or an enrolled agent to sort of help you out in terms of figuring out what your tax responsibilities are. The thing is that when we talk about paying quarterly taxes, it's really important to understand that it's not just the self-employment tax you have to pay, right? I think I've already established that. I mean, everybody when they think about quarterly taxes, they're thinking about Social Security number. Social Security. That's the tax, and also also Medicare, right? But you have other business income. You have other sources of income, like you have rental income. Any sources of income, you got to pay taxes on those sources. Okay, rental income, for instance, or I don't know. You have a lot of stuff here. Even if you actually sell a capital asset, and you actually recognize a gain on the transaction, you have to pay taxes on those. It's just the bottom line is that the IRS doesn't want to be in a situation where people are just making money during the year, but then they're not paying their taxes right away. They're waiting until the end of the year, and people are using the government's money to actually the government tax money to actually do other stuff. So the IRS just wants to be paid as soon as possible. And don't forget what I told you about qualified business income deduction, the QBI. This is a great way to actually reduce your business income. Okay, so basically you are able to know exactly how much you make and what type of expenses do qualify for the QBI. Okay, and it's one of those things where you gotta always put yourself in a situation where you are tracking your expenses, and you are basically writing everything possible off. Bottom line is, if you have a question about everything I'm telling you, please let us know in the comment section below. Just type your question. Please remember to let me know, to let us know, because it's a team that actually reviews your questions. And basically, you gotta let us know the states and city you are actually you operate in, your business operates in, and your question, and we'll get back to you. Not a problem, because it can be a little complicated to do a generic explanation here without the specifics of a case, right? So we would rather just wait for questions from viewers to sort of guide us in the right direction when it comes to answers. So if you are in that situation, you want to have a clearer idea of this quarterly paying, like this tax paying stuff, estimated tax on a quarterly basis, you just let us know in the comment section. Thank you so much for your attention. I really appreciate it. To this conversation, I was just giving you a guide to paying quarterly taxes. And so I give you the overview, the pro tips, and now I'm talking to you about the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.